Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it.
This is the daily heat map of the S&P 500 and US stocks led Wall Street lower as US-China trade talks continued by President Trump and President Xi Jinping, and as the market assesses a heavy week of mega cap earnings, and today was actually a very mixed day. The indices were broadly lower, and that was led by the mega caps, and that was because we got Microsoft's earnings yesterday. The stock was down 2.9% on the back of that. Meta was the biggest loser right here, down 11%. The market not really liking their capex story. Go to yesterday's video if you want a quick assessment on Meta's earnings, as well as Google's, which was up 2.45%. You think the stock would be up much higher, but it was up about 7% in the pre-market, came down, still green, bucking the trend here of the mega cap. Amazon, Tesla were down 3%, and you can really see the mega caps, Nvidia, AVGO, semis as a whole just really took it on the chin. Even though we saw absolutely stellar earnings from Microsoft, from Meta, from Google, the market not really liking the valuation and some of the risk parameters as it pertains to increasing capex spending. But we did see a rotation. If you were in the equal weighted indices, we did see the broad software market do really well. Apple outperformed the mega caps here. We saw a move into financials, which again, great earnings from the space right here. Healthcare did really well. Industrials was kind of mixed, slightly green. We saw consumer defensives perk up, and we did see some of the defensive names outperform. So, there were pockets of outperformance if you dig a bit deeper into the market. However, it was a broadly red day with the S&P 500 falling 1.1%, but we'll talk about what happened in the after hours. And then gold up 1.96%, continuing to outperform, but again, coming off that base. We saw green sectors being in real estate, financials, and healthcare. They were up less than 0.5% each, and then we saw the majority of sectors fall, led by selling here in technology, discretionary, communication, services. So a pretty rough day for the market. But given the rally we've seen this year and the rally we saw in the last month, it's good to have just a tiny bit of a breather before we continue the rally into year end. Growth really took it on the chin. You could see this through and through. Large cap growth, mid cap growth, small cap growth underperformed the market as a whole, but value core in the large, mid, and small caps were also red. Now, a lot of this move just had to do with the earnings we got from the mega caps, but we also got trade talks. Now, Donald Trump and Xi Jinping discussed their quote amazing meeting in South Korea. Now, the truth of the matter is we haven't really got much of anything from this. And I think until we get a definitive trade deal, and word on the street is we're looking at a China-US no tariff deal, until we get a definitive trade deal, I think the market is probably going to sell the rumor and potentially buy the news. That being said, there's also rumors that President Trump and Xi Jinping have reached a deal that would delay implementation of Beijing's rare earth exports by at least a year, and we saw US rare earth stocks fall quite significantly on the back of that news. That being said, this is the next catalyst. Big tech earnings is behind us, apart from maybe Nvidia. So right now it's this, the government shutdown, and the economic data that's about to come to front of mind. We do get the CPI data tomorrow, so these are our next catalysts. But in the year and now, we saw Amazon stock absolutely rocket up 11% in the after hours after reporting its earnings, and that's because it came with a beat on revenue, beat on earnings per share. In fact, earnings per share beat by 24%. The market wanted $1.57. Amazon C-suite came out and reported $1.95. Absolutely insane stuff. Andy Jassy coming out and saying AWS growth, we haven't seen this type of growth since 2022. The estimates for AWS growth was 18%. AWS actually grew this quarter at 20.2%. So the cloud providers really accelerating. And this was on the back of what saw Google, and this was on the back of Google's cloud accelerating yesterday. So the AI dream is not yet over. We also had Apple report today, and while the stock was down early on in the pre-market, after the earnings call, the stock was up 3.36%. I think it's actually up about 5% now. After beating EPS expectations of $1.75, reporting $1.85, and smashing revenue expectations, the market wanted $100 billion flat. Apple came out with $102 billion. Reuters also reported that Tim Cook, in an interview following Apple's earnings release, forecasted double-digit iPhone growth and total revenue up 10 to 12% year over year for the holiday quarter, which is well above the street's estimates of about 5 to 7%. Cook also said demand for the iPhone 17 lineup remains higher than supply. Can you believe that? And expects China sales to return to growth in Q1 despite early shipping delays. And then for everything we saw today, guys, market breadth was just terrible. Look at this: 4,000 declines, 2,200 advances, and this is like the Wilshire 6,000. It's sort of like the broad US market, large caps, mid caps, small cap stocks. It even encompasses some micro cap names as well. So this is a really strong indicator of just the market as a whole, and market breadth not looking that great. We saw inflows in the New York Stock Exchange, outflows in the Nasdaq, with the S&P 500 down 1%. But we'll talk about what's happening in the after hours just here. Okay, guys. And then if we actually look at the moving averages, longer term averages continue to hold, but we're getting very close to that 50% mark, and we've lost the medium term and shorter term averages. And this is what we can expect now: some near term volatility, but longer term, we're still looking solid unless we actually go ahead and lose these averages right here. That being said, I'm still bullish on this market, but do expect some near-term volatility. Go watch yesterday's video on the charts where we talk about why I am expecting a little bit of a pullback before a rally higher. Now, guys, looking at the charts really quick right here, you can see the S&P 500 down 1%, the Nasdaq down 1.4%. We actually did see outperformance in the Russell 2000, the RSP, but they were still red here in aggregate. You can see growth down 1.54%, value down 0.48%. But look at the futures, right? This is very interesting. So you can see right here, look at the S&P 500 close at 68.22. Right now in the futures market, the S&P 500 is at 68.62. So the S&P 500 was down 1% today. It actually retraced about 2/3 of that total 1% down move. So in aggregate, if you look at what the stocks did today and the after hours market with Amazon and Apple, right, you're looking at a situation where the S&P 500 in total isn't down 1%, but is probably down about 0.3%, something like that, right? Very solid stuff, although still a negative day, and the weekly candle right here not looking that ominous. That is a what we call a shooting star doji, but we'll talk about that a little bit later on. Looking internationally, we saw mixed returns everywhere, with China falling the most. Bitcoin and Ethereum continue to just be incredibly volatile and just do a whole bunch of nothing, up days, down days, net equaling zero. Volatility ticked down now. Very interesting, we're seeing the 2-year and 10-year yield rally, right? Because the market was expecting a cut in yesterday's FOMC. We got that. And then a cut again in December. But Jerome Powell poured cold water on that, and so the markets need to re-rate rate cut expectations, and ultimately that means the yields are going to move higher. I wouldn't be surprised if we saw a 4.2 10-year in the next couple of weeks. The dollar continues to see strength, and that's always going to happen when you're going to have less rate cuts than expected, right? Simply because US yields are going to be higher than the rest of the global market, which is seeing significant rate cuts. And then gold was up 2%, silver was up 2.5%, TLT was down, and crude pretty much flat here. Now let's actually talk about the S&P 500. This is the weekly chart. Not a good looking weekly setup right there. I mean, technically speaking, you know, the S&P 500 is still up 0.45% for the week, as you can see right there. However, definitely sellers coming in from these highs, but you do have to understand in the context of us pretty much making higher highs, higher lows into weekly all-time highs. Now, I've looked at this level, the 6130 level, for a while now, and for those of you that have been watching my channel, you know that I've been saying that this is a very key level that we could pull back to and find support for us to go higher. Now, if we do take a measured move from this level right here to, you know, the 6130 level, you're looking at about a 10% pullback. It's going to be what we would call a correction. The reason why I think we could actually pull back and find support at this level is because it's where we made these previous all-time highs right here before the Liberation Day lows, and it's actually where we started the rally to the upside. Now, we do know that resistance turns into support and vice versa. So if we are to pull back, right, let's say we are to pull back, and in the S&P 500 have quite a bit of volatility, find some, we can then make our next move to the upside. And that would just signal to us that we are actually forming, right, a higher low relative to this low right here would be the key area of support, as you can see right here in the context of making all-time highs. This would be very, very bullish. Now, don't get me wrong, a 10% drawdown would be absolutely brutal, right? A lot of people will get worried, but that's what happens. We get about 1 to 2 10% drawdowns every couple of years. And if we get something like that, don't be surprised, guys. Simply lean into the dip, buy the dip. And ultimately, you want to be buying these names, right? Amazon is probably a name that, let's say we do get a dip, probably go ahead and lean into this name, right? A very, very strong trend. This is the weekly chart. Let's actually just go on the daily chart. You can see Amazon has done pretty much nothing since December 2024. But up 9%, and that's going to be a tailwind. I do think if you're looking at the mega caps, a name you actually want to look at right now is Alphabet. Stellar earnings, and the stock was only up 2.52%. I think if we get a pullback here to the 274, maybe even the 256 level, this is where you lean into Google. But I think Google's going to see maybe 310 before the end of the year or early 2026. So those are the mega cap names I want you to lean into. Don't look at Meta right now. Don't look at Microsoft right now. Actually, Meta, because it fell 12%, you possibly could look at a turnaround play. But I think what's going to happen with Meta is I think it's just going to trade sideways. I think it's just going to trade inside this range for the next couple of months. I think Google's going to see some strength. I actually think Apple is going to see some strength as well. And I think another name, if you really want to lean into the mega cap names, is Nvidia. So Nvidia, Google, Amazon, these are the names you really want to look into. I do think that Nvidia, if we do get a pullback somewhere around here, the 183 level, that's where you probably want to lean into Nvidia. But me personally speaking, I wouldn't really get into Nvidia. I would personally look at these other names, APLD. I've been talking about this one for a while. I think getting this name at the $30 level is an absolute steal. I like it. EOSE. Now, this stock has not acted super well in the last couple of days. You can see we're sort of breaking this key trend line of support right here. That being said, I really do like this name. I like the energy plays. I also think uranium is a great place to be right now. There's a ticket symbol UUU. Again, these are all small cap names trying to look for absolute alpha. I think right here, if you can sell like the $20 or the $19 cash secure puts, get assigned, I think we're going to see massive moves in the uranium space, but keep this position fairly small, guys. Don't size it up too big. In terms of the neo cloud providers, CoreWeave is where you actually want to be right now. But personally, I actually do like Iron and NBIS a little bit more with regards to CoreWeave. Their strength is significantly better in terms of technical strength. And I do think these names probably have a lot more of the early growth to squeeze out when compared to CoreWeave. That being said, Iris is a good one. NBIS is another good name. But the thing with Iron Energy, right, is if they announce like a partnership with one of the mega caps, this is definitely going higher. And you could see, $100 before the end of the year for a name like this, or I would say early 2026. So instead of Nvidia, I would lean into like these names. Another name is BITF, Bitfarms, for sure, something like this, right? Again, well off its highs, and even the power plays like PULG, Plug. These are the names that you want to be into. Now, Plug is looking not that great right now at the 265 area, but I think we're going to find support somewhere around here. There's definitely support at this level right here, somewhere around here, probably the lows, 220. I know it is a bit of a fall to get there, but this is the type, when you buy these smaller name stocks, you want to look for volatility. I think the treasury name's looking really good right now. I've been a big proponent of saying you want to buy BNMR, and that hasn't changed just yet. Now, BNMR sort of breaking this trend line right here. So this price action doesn't look that great. That being said, ultimately, if we can hold this low right here, we can go ahead, target the highs. And again, crypto is just digesting a lot of the moves we've seen in the last couple of months. And that's to be fair. So these are the names I would lean into. I think you want to still stay with these mega cap names. I think based on the capex numbers we saw for 2025-26, I think the runway is still definitely clear for us to move higher. Let me show you something I posted on my Twitter. I posted this yesterday, and I said the message from Meta, Microsoft, and Google, and this is also the same message from Amazon, is very, very clear. They will be capacity constrained through 2026, right? Capex spend will continue to increase through 2025 and 2026, and energy is becoming the next bottleneck. Vis-a-vis, the AI trade is far from over, and where you want to lean into now is the energy space. Look at EOSE, look at Plug, look at Vistra Energy. These are the names you want to be looking into, right? Energy is probably what's really going to take the cake, and that's why you're seeing names like Iris Energy outperform. That's why you're seeing names like Bitfarms outperform, because they really have an energy play built into their data center. Whereas someone like CoreWeave or NBIS, the energy component is not quite as solidified. A lot of these Bitcoin miners turned cloud providers had a 3, 4, 5, 6 year head start when it comes to securing cheap energy. And that is why you're seeing these stocks absolutely outperform. That being said, I think you want to lean into tech. I think you want to lean into AI. If we do get a pullback here in the S&P 500, right? I think you probably want to lean into that right here to the 6130 level. I think also in the Nasdaq 100, you want to lean into that, because I do think this market goes higher into 2026. Now, guys, diving into sentiment, this is the AA sentiment survey. And despite the price action we've seen in the market in the last couple of days, sentiment votes actually ticked up significantly, and we saw bullish sentiment votes tick down. I think this indicator right here is more of a contrarian indicator as to what's happening in the year and now. It's also a lagged indicator. That being said, coming into this week and into this print, bullish sentiment was actually pretty high. Bearish sentiment ticked down, a stark difference from probably what we saw just in the last couple of weeks. And that's probably telling you everything you need to know. Now, when we look at earnings, right? I mean, I get why sentiment is where it is right now. You can see here that earnings growth, now this includes Apple and Amazon's quarter, right? 10.4%. Look at the estimates coming into this earnings season. And if you exclude energy, right? 11.3%. Revenue looking really, really good. 7 and 7.5% ex energy. And I think the key performer right here, guys, is actually margins. We saw margins tick up ever so slightly from 13.1 to 13.2%. 84% of companies beating the analyst expectation. Earnings season is good, and ultimately this is what will propel stocks higher. Now, when we look at the macro, guys, I want to look at some unemployment figures, labor market figures, because this is the Fed's real-time unemployment rate, something that we just don't have right now with this government shutdown. Yes, the government is shut down, and right now we're looking at an unemployment rate of about 4.35%. So yes, we are seeing, a move higher right here and a continued move higher. That being said, we're still quite literally at, full employment and at employment at historic lows. I think, pre-COVID, the unemployment rate was closer to like 4.5% here. So we're about at the average of the last, I would say, 20 to 30 years. When we actually look at the Chicago layoffs and separations, this is ticking higher. A little bit concerning, but again, the average is about 2.2 right here for the last 30 to 50 years. So we're still well below the average, and it's nothing to be concerned about. The problem is if this trend continues, that's where the concern comes. But when we look at consumer data, I spoke about this yesterday. Visa's card spending is telling us that things are healthy. Spending was healthy into October, discretionary and non-discretionary spend, and the US consumer is still very strong on both credit, debit, and in total, seeing total growth grow 9%, US growth about 8%, right? So very, very solid stuff you want to see. Now, guys, with regards to earnings, we have Chevron, Exxon, Colgate, Palm Olive tomorrow. Those are the big names tomorrow, but all of the other big names here are all behind us. A crazy week of earnings, but a solid week for the mega caps, except for, Meta. Meta had a pretty terrible week, but I think Microsoft had great earnings. Google, Apple, Amazon, and the price actions was actually relatively good as well. In terms of data for the rest of the week, we got PCE tomorrow. We'll see if we actually get this data with this government shutdown. Anything can happen between now and then, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.